Good morning, treasurers. This is your host Parthesh from Fintech, and you are listening to Night Snippets. Here is what you need to know before going into trade for 9th December 2021. In the international market, on Wednesday, Pfizer and its partner BioNTech said their booster dose provides similar protection against the Omicron variant of COVID-19 as 2 doses did against the older strain. US Treasury yields continue to march higher with a third consecutive successive day of yield increase. Reasons? Number 1, waning Omicron fears, as the early indications are variant is not lethal and has mild symptoms. And number 2, economic growth on its guided path. US 10-year yields rose another 4 basis points, closing at 152, and 30-year rose 7 basis points, closing at 187 percentage points on Wednesday. In the crude oil market, easing of Omicron fear is seen, where crude is trading at $75.98 per barrel from a recent 1 week prior $70. Short-term range for crude is 74 to 77. In the currency market, dollar index is stable at 96.03. Today's range 95.93 to 96.19 for dollar index. USD CNY or Chinese yuan is at 635, getting stronger. USD INR with a high of 75.57 closed at 75.46, a close below 75.50 for third consecutive day. Support at 75.10 and resistance at 75.50 does exist for USD INR. Yesterday, FII selling seemed stopped, and we are yet to get the confirmation. But if FIIs stop their intensive selling, INR will become stronger. Knight research team expects USD INR pair to trade towards 75 levels pretty soon. As far as the domestic markets are concerned, here are RBI MPC policies outcomes as Knight research had anticipated prior. Number 1, repo at 4% and reverse repo at 335%, unchanged. Number 2, marginal standing facility MSF at 425, unchanged. Number 3, policy stance accommodative with 5:1 voting, where Mr. Jayant Verma voted against the current stance. Number 4, RBI retained its inflation forecast for FY22 April to March at 5.3%. Now the inflation CPI is for October to December is seen at 5.1% versus earlier 4.5% forecast. Whereas for January to March 2022, CPI is seen at 5.7% versus 5.8% earlier forecast. 563 2026 closed at 566 versus 572 the previous trading day. 610 2031 closed at 634 versus 639 the previous trading day. The little buoyancy or the rally was purely because RBI delayed its reverse repo hike program. As far as the OIS curve goes, 1-year OIS at 423 versus 429, 2-year OIS as 472 versus 480, and 3-year OIS at 531 versus 536. There was a fall in the OIS curves as the reverse repo hike has been delayed. Trading strategy, again the gains were limited till 634 only in the benchmark index. Hence, buy near 637 and sell near 634 will still hold true for benchmark 610-2031. Trading range for 610-2031 would be 634 to 637. That's it for today. See you tomorrow with a new episode of Night Snippets.